Vitale of Wealth Management here with this week's Gradient Investments Market Update. All information is gathered as of the week, September 8th, 2025. The week in review. Before we say anything, let's just say a prayer for Charlie Kirk and his family. May he rest in peace. What a very shame, horrible act. He was assassinated just today, Wednesday, just a little bit ago. So pray for him and his family. Sorry about the somber news. Let's get into the week in review. The major U.S. indexes finished the week mixed. The NASDAQ led gains with 1.16. S&P was up 0.37, while the Dow was down 0.26 or 0.26. Small caps continued the recent momentum as the Russell 2000 climbed 1.07. We've been waiting for small caps to come back. On growing expectations of interest rate cuts, the U.S. aggregate bond index rose 0.93% for the week after a pullback in U.S. Treasury yields. On the economic front, Friday's closely watched jobs report signaled further softening in the labor market. Job openings fell to the lowest level since 2020, while the unemployment rate ticked up 4.3% in August to 4.2% in July. It was a shortened trading week last week as the markets were closed on Labor Day, September the 1st, in observance. So let's talk about what's happening now. Upcoming economic releases. You know, a lot of these different releases, that's what the market indicators are looking for, is what drives a lot of the ups and downs. This week, the markets will turn their focus to the key updates on inflation and consumer health. On Wednesday, which is today, the PPI number will provide a read on wholesale inflation, followed by the Consumer Price Index, the CPI, which is coming out tomorrow, September 11th. So offering a consumer level perspective. So, and that wraps, this wraps up on Friday, September 12th, with the Consumer Sentiment Report, which gives us more of additional insight into the strength of the economy and really what's happening and of the consumer and how things are going. So we're still seeing a lot of resilience out there, but we are starting to see some softening. We are seeing the labor market soften, which is another reason why the Fed should cut rates this week coming. We should see a quarter point at least rate cut. More than likely, we should see a half a point. They need to really start dropping because the labor market is softening, and that's one of the key reasons that they're looking for. So market outlook, Friday's weaker job reports boosted expectations that the Fed will cut rates at next week's FOMC meeting on the 17th, with the market now pricing at least a quarter point rate cut. You know, a lot of economists are thinking that we should have had at least a half a point already. We're way behind the curve. And I think once we start seeing these rate cuts start coming, it's going to put a lot more momentum in the market and the economy. So looking ahead, this week's key inflation release, the PPI, on Wednesday, and the Consumer Price Index on Thursday will be closely watched for signals on economic health and the continued impact on tariff prices. We haven't seen a whole lot of impact on that. A lot of that was blown out of proportion. These reports will also serve as critical inputs for the Fed as it weighs its upcoming policy decisions. I think we are going to see something from the tariffs. It's going to be a little bit, but as I was saying, some of it's going to be absorbed, some of it's going to be passed on, and some of it doesn't even matter. But I think what we're going to see is the boom and the revenue coming. It's really going to be a game changer for us, but we'll keep a close eye on that. As far as the activity of the Gradient Investments portfolios, there was no rebalancing done last week, so everything's pretty much staying the same. Stocks in the news. We're going to look at Broadcom, which is AVGO, which is owned in the G50 and the Core Select. This custom chip company reported better than expected revenue and earnings last week and announced a new $10 billion AI chip deal. The stock was up 12.29% for the week. How about Google, which is Alphabet, owned in the G50, the G33, Core Select, and the Contrarian Choice? A judge ruled that Alphabet will not be required to divest its Chrome browser. That was a big thing in the news. A decision investors viewed as less disruptive than feared, so shares were up 8% after the news and 10.93% for the week. So very strong on the portfolios. The portfolios are doing good. We're seeing year to date as of the end of August. The Core Select is up over 10%. The G40, which is our international, is up over 25%. The G50 up about 8%. So a lot of the growth portfolios are up 8 to 10%. And then even more with the cryptocurrency is up even more than that. And so is the gold, the precious metals portfolio. So if you'd like any information, definitely give us a call. Let us know how we can help. That includes this week's market summary. You know how to get a hold of us, 855-756-5700. Visit us at vitalewealth.com. Hope you and your families are doing well. God bless you. We'll see you again next week.